Is it time for us to look at the emerging market for investments? I think the answer seems to be a little cagily, maybe a yes, especially after the February pullback of about 7% in emerging markets, which was obviously followed by a 22% jump, 22% hike in the previous quarter. So 7% pullback was very good. Somewhat expected, and that was perhaps a good time for us to be investing in emerging markets. What really is helping the emerging markets? First of all, 2022 was bad for emerging markets. I think in terms of dollars, it gave a minus 20% return. It underperformed a badly performing US market, right? US didn't perform too great in 2022. However, emerging markets underperformed that. So China growth seems to be back. China story seems to be good. So whatever people say about democracy in China not being there, etc., missing of real rich people, and the government trying to take over companies and making a mess, people just love to invest. Money goes where the returns are good. So a lot of money is going into China. Some of the money is coming into India, right? These things are bound to happen, because when you give bad returns, you are likely to be followed by good returns. So China is emerging. India is not likely to emerge, because India has not done so badly in 2022. Yes, there was no great return, but in terms of dollar returns, we are not minus 20%. So China, that minus 20% is there. The US market doesn't look too great for equity, but the bond market seems to be good. So a lot of money would flow into bonds. Some money would come into equity also, but chances are a lot of money will come into emerging markets. It's poised for growth. Then even the smaller countries in Asia are likely to do well. India may not do too badly. All this might attract money to come into the emerging markets. What are really the factors which are helping emerging markets is the inflation in emerging markets is definitely coming down. Inflation seems to have peaked. I don't think inflation in India is going up much too high. China inflation is lower, so some money will flow into emerging markets led by China. I'm not saying only China, but led by China, money will come into emerging markets. This is a good indicator even for people in India to look at emerging market funds. So what is really going to help the emerging markets to attract money? One, inflation is definitely easing in emerging markets. So people will say the growth possibilities are higher. Secondly, the downgrades are not happening. At least the earning downgrades are not happening. Even in Taiwan or China, there are no great earning downgrades. The dollar seems to have peaked. There's a lot of talk about dollar de-dollarization. I'm not getting into any camp about de-dollarization, but de-dollarization is a word which we are hearing more often now. So will it mean that the dollar is going to weaken? Maybe, maybe not. But I don't see the dollar rising the rate at the same rate at which it rose in, say, 2021 and 22. So that kind of hurt will not be there because of rising dollar. The Chinese growth, because of the seizing of COVID, or getting a better control, what kind of vaccines the Chinese are using is still anybody's guess, right? So, but China is opening up. China exports are up. China internal growth is good. So that is so if China can attract, then so can other emerging markets. Dollar peaking, like I said, dollar is already perhaps peaked. So dollar growth may not be high, may actually come down. So even if against the rupee, if the dollar comes down to 78, 79, whatever, so all those non-dollar dependent economies might do well. So oil, if it is soft, that might augur well for some of our industries. So so all these things put together, it looks like emerging markets will start getting inflows from the US and maybe some parts of Europe also, if the prosperity is not too bad. Japanese funds might get into these areas. So yes, I think emerging markets will be a good place to put your money. It's not just, I'm not saying don't put your money in India, but apart from India and perhaps US, because US markets is also down. If markets are down and if inflation is high, it's a good combination. Yes, of course, if you look at 2022 return on equity in the US, it would be bad. It should be bad all over the world. So all these indicators saying interest rates are not likely to come down in a hurry. So asset prices have already taken the damage in the short run. In the long run, they have to move up like interest rates. So I think US market, emerging markets, Indian markets, equity, maybe we are not too much in a hurry, but if you can start your SIP now or maybe 3-4 months later, you won't be too badly off.